Why is absolutely nobody talking about this incredible cash cow offering a massive 16% interest for investors? I was recently back on site in Malaysia at Tambadana, which is a lender you can invest in via the Loanch platform, to find out exactly how they managed to scale from just 6 to a 30 million euro loan portfolio in the last 12 months, successfully generating more than $1.2 million in net profit every single month. Now things are getting really exciting for all the yield hunters among us, so a warm welcome to Northern Finance. My name is Alex Black.
Hi, my name is Alex from Northern Finance. This video was translated with the help of AI so that we can reach more people in their own language. A native speaker has reviewed the translation. Still, some sentences might sound a little unusual. Thanks for being here and enjoy the video now.
I was recently traveling in Asia again, and I couldn't resist stopping by Malaysia as well. More specifically, I visited the lender Tambadana in Malaysia's capital, Kuala Lumpur, which we finance here through the P2P lending platform Loanch. Tambadana is currently the largest lender on Loanch. As investors, we are financing short-term consumer loans here, usually with maturities of around 3 to 4 months, as you can also see quite clearly in my portfolio. In return, investors are currently earning around 15% to 16% interest per year, which is really high, and if you want to invest here yourself, you'll find the link to Loanch, including an extra bonus on top down in the video description. Just like my last visit on site, it's definitely worth checking out if you're interested. I've been investing in these loans on Loanch for quite a while now, and I'm also very interested in how things are developing here, since I myself have personally committed an investment of around 2,500 euros. And in this detailed video, I want to show you exactly what has taken place here since my last visit up to today, what the numbers tell us now, as well as the advantages and disadvantages of investing here, and how to assess the potential risks and returns. Before we get started, if you enjoy these on-site visits, even those that go a bit further behind the scenes and offer such insights, then please take a moment to support me with a like and a subscription. Thank you. So let's get started right away, and let's begin with the fact that the lender Tambadana has experienced really strong growth here over the past 12 months. Truly incredible growth. 1 year ago, the entire team had around 40 employees. Today, there are already 80 people working here across 2 full floors, so the workforce has basically doubled within just 1 year, and the company has also moved into a new office here. That's why not everything is fully set up yet, and the office still feels a bit unfinished in some areas. On this floor, you'll find the finance department, the verification team, and right at the back, of course, the debt collection team as well. That part is especially important for a lending business like this. And as you can tell from the decorations here, I was there at the end of March during Ramadan, so not everyone was back in the office yet. Some people are still on vacation because in Malaysia, most people are Muslims. There's also another floor, where the technology department of the parent company, Fingular, will soon be moving in. But what I found much more interesting than the office and so on was the interview I was able to do here with Tambadana CEO Harold Chen and Fingular COO Alexander Naumov. In this video, I want to show you the highlights from our entire conversation, but of course I've also linked the full uncut interview for you below in the video description. But the most important statements from this conversation are in this video now, and we'll start right away with one of the first questions, which was about a certain profit margin, specifically the so-called EBIT margin, meaning earnings before interest and taxes, which is crucial. As you can see here in the 2025 management report, the margin fell from around 8%, 7%, and 10% in spring 2025 to only about 3% by the end of the year. That still means the company is generating a substantial profit in US dollars every single month. But the trend is important. The margin has clearly come down, and profitability is no longer as high as it was earlier in the year. This is what CEO Harold Chen told me about it.
I wouldn't say that it's cutting into the profitability. It's more like the business is maturing. So when we go at that speed, you sort of would be able to see some form of what you call a compression. The other part is that in terms of the product structure, a lot of the revenue is recognized upfront, and as we have a lot of as we are gaining more better risking customers, right, a lot of them are converted from a single payment loan to an installment loan.
And since these installment loans generate their margin at the beginning of their term and not at the end, the margin continues to decline in the following months, even though the loans are being repaid correctly. I find that interesting. And even when we look at the most recent figures from the management report, we can see that the margin can fluctuate quite a bit. Right now, it is somewhere between 7% and 4%, which translates to roughly 2.1 to 1.3 million US dollars in profit before interest and taxes per month. I followed up on this point again. Why are costs actually rising as quickly as revenue?
So I would say that as we were growing, we needed the resources to support that growth. So a lot of it comes in forms of variable costs, like I mentioned earlier. So that is one. The other one is manpower. At a very shortage of time, we will need to pay like overtime, working over the weekends and all that. So that builds up.
Harold also emphasizes the following.
For example, the legal fees that we pay for per agreement, that has come down. Acquisition has come down tremendously.
How much?
30%.
Okay.
30% from what it was before, right? So
while the growth continues.
Yeah, while the growth continues, and so we really happy about that.
Next, I asked a very simple but important question. Why should investors trust Loanch with their money? Singular COO Alexander gave me his answer.
We've proven it, as Harold just said, we've proven that the model works, with Malaysia scaling 2 years in a row and staying consistently in the profits.
And afterwards, he emphasized the following.
Discipline and systematic approach to everything that we do, which is being products, risks, underwriting and marketing as well. When to slow down and protect liquidity and to scale up when there's an opportunity. Doing it not at any cost, but doing it efficiently.
And it's very important to me to also ask critical questions, for example, regarding the annual financial statement. Because while we do have the management reports with the most up-to-date figures, which is good and shows a solid profit, and we also have the audited annual financial statements from the lender Tambadana to whom we are lending our money here, which is also very important. But what is missing and we don't have yet is an audited annual financial statement for the entire group itself. COO Alexander told me the following about this.
We are currently moving towards a more consolidated group institutional setup, and audit is part of that process. So I think going forward, probably this year, you might as well see the group reports consolidated and audited. But in terms of investing, I don't think it's going to tell you much, because if you're investing directly into Malaysian business, which is run by Harold, I think most important is to see the financial statements of this current entity, which is self-sufficient, basically. So to make a financial decision to invest or not to invest in business, we're very transparent, and you can see the results published on Loanch.
Right. And when you said it will be for this year, do you mean the last year's financial results?
I don't want to make any promises because it's a long process. We're consolidating as a group. Different entities are being restructured and positioned in a holding manner. So if it's not for the 2025, but definitely for 26.
Interesting. And once that is implemented, Loanch will be in a really strong position in my view. And honestly, I also think it has to happen. For investors, this is a very important point. I also found out something that is not public yet. Soon, loans are expected to be issued to civil servants here in Malaysia, meaning people working for the government and the public sector. Personally, I think that is a very positive development.
That's interesting. I was in Mexico 2 years ago in Mexico City, and they also, some loan originators gave loans to government employees. They never default.
Yeah, so it's the same thing here.
Yeah.
What happened is that we will give the loan, and the loan is repaid from their paycheck.
Exactly.
Yeah.
That's pretty cool.
In addition, there is now a Sharia-compliant loan, meaning a loan that meets the criteria of Sharia law and has also been certified as such. This is very important for many people in a Muslim country like Malaysia to have something like this available for their finances. Here you see the CEO, Harold, with a certificate, and regarding the current customers' results and profits, he says the following.
So just to give you a sense of figures, we are doing about 200 disbursements per day at the moment for the Sharia compliant product. But we only give it to our very, very good customers.
Right.
Yeah.
Okay.
So we were testing it first to see how it reacts.
Yeah.
And then after this, we'll go on a full-fledged digital marketing campaign.
And then the question of all questions.
And do you expect similar profitability?
I would say yes.
Okay.
Similar. Yeah.
All right. Interesting.
This will probably surprise a lot of people because most assume that products like this become less profitable for the provider, but that is actually not the case here. In practice, there are no late payment interest charges or similarly high penalties if a borrower falls behind. Instead, there is only compensation for the actual costs that have been incurred, plus a penalty that has to be donated to charitable causes. But the total repayment amount is still very similar to a conventional interest-bearing loan, and it works here according to the so-called Tawarruk principle. Here's a short diagram to show how the whole thing works. Feel free to hit pause if you want to read through this, since the majority in Malaysia is Muslim, places value on such criteria, and in the end, the product is just as profitable for us as investors and for Tambadana as regular interest-bearing products. I'm very curious to see how big this whole thing can get and how big Tambadana can still become. And if you want to invest here as well, as mentioned, the link is down in the video description where you'll get an extra bonus that you don't get with the regular sign-up. Additionally, the Fingular Group recently received a large financing of $10 million on the private debt platform Kilda from Singapore. Very interesting, and here I was curious about the details of how the whole thing is actually structured. Unfortunately, these are of course not publicly accessible. But after making several inquiries, I was able to get Alexander to share some specific details, including how much interest they pay here.
Can you tell investors roughly where the market is? Just a range?
It's close. Well, I should say it's very close to what we're paying our launch investors.
Right, thank you for that.
14-15%.
And with that, we come lastly to the loan defaults before we move on to the pros and cons, as well as my conclusion regarding the loan defaults. So here, I specifically asked about the reasons why the loan loss provisions have increased from a level of 9% of the loan volume last January to 12% at this current point in time. Harold told me the following about this.
But what happened is that throughout the course of the year, throughout the third quarter of the year, there's been implementation by the regulatory where we are unable to use certain collection strategies. For example, we can't call them more than X amount of times per day or per week. So that is something that we need adjustments, and those adjustments sort of increase the NPL.
And after that, Harold also says that for this reason, they prefer to build up too many provisions for potential loan defaults rather than too few. And with that, I would say let's move on to the pros and cons, starting with the disadvantages. The first point is that we still do not have an audited annual financial statement for the parent company. Although we are not lending our money to this parent company, there is still a lack of an overall picture of how the entire group is doing, even though this is supposed to be provided in the future. At the moment, we still don't have it. Secondly, we still don't have a long track record. Whether Tambadana will continue to develop successfully is hard to say, even though the development so far has been very good and they have scaled well. And finally, thirdly, there is no secondary market where you could sell your loans early. Your capital is tied up here for as long as you are invested. On the other hand, when it comes to the advantages, it should be mentioned that the terms here are very short, usually only 90 or 120 days. So the lack of a secondary market isn't that big of a deal. The interest rate of 15 to 16% for this period is also very attractive. You won't find that on Mintos or similar platforms. It's currently unavailable. At Loanch, the interest rates are much better, up to 50% higher than Mintos. And after that, the loan originator Tambadana is profitable despite provisions and can now leverage economies of scale with a $30 million portfolio, which it couldn't do before. That's why I'm investing here as well, and then there are also the new loans being added, both to government employees and the Sharia-compliant loans. So I'm very curious to see what growth potential is still there, and in my opinion, the advantages outweigh the disadvantages. So let's sum it up. An investment at Loanch in Tambadana loans can be very exciting for all yield hunters. We have a young company here that scaled up significantly last year and is immensely profitable. Unfortunately, we don't have a long track record yet, but honestly, if we did, we wouldn't be earning so much interest. These 15 or 16% just wouldn't be possible then. It would be more like 7 to 8%. Fundamentally, the data looks good to me. I also really appreciate that they publish the most important key figures so transparently every month. That's truly a good thing, and it's also a plus point for me that they deal with investors so transparently here. And combined with the fact that they also subject themselves to such visits and interviews with critical questions, it all stands out to me in a positive way. That's why I like investing here, and if you want to do the same, as I said, you'll find the link below in the video description. I also recommend that you watch the entire interview. It's very interesting. I've also divided the whole thing into chapters so you can quickly navigate to all the important points. What's your opinion on Loanch and the interest rates here? Let me know in the comments below. I'm looking forward to the exchange, and with that, I wish you a good return and see you next time.